Have you ever wondered why bother with options if you can just invest and win? Today I will explain why I don't use options and why maybe you shouldn't either. They say options are a tool of opportunity, a chance to make huge returns in a short time. Sounds exciting, but here is what research shows. Retail investor trading options on US exchanges regularly lose 5% to 9% per trade, especially around earnings announcements. And when volatility is high, losses can reach 10–14%. In other words, you enter a game where price jumps unpredictably, commissions are huge, and slippage is your potential gain. If you're betting against market makers, algorithms, institutions, and those bets most often lose. Scientists at Stanford and elsewhere recently demonstrated that many investors overpay for options relative to other realized volatility. They pay premium for market jumps that never come. Another study found that retail traders prefer complex multi-leg strategies on highly liquid, volatile stocks. And over time, those strategies show symptomatic negative performance. Even leading investors avoid options in their core wealth building. Take Warren Buffett. In 2008, he made a public bet. A simple low-cost S&P fund would outperform a basket of hedge funds over 10 years. He won. His fund averaged about 7% annual return, while the hedge funds, after all fees, managed only 2% annually. This wasn't luck, it was message. Complexity, high fees, hidden costs don't give you an advantage in the long run. Buffett bet on simplicity and won hands down. Options give a miracle of control. You think you can predict directions, time volatility, but in reality markets don't obey your models. When you bet on volatility, you aren't building value, you are gambling, and odds are the house, meaning those who set the rules wins. There is one more thing: hidden costs and technical traps. Even if your prediction is correct, bid-ask spreads, slippage, commissions can chew up a big chunk of your profits. Platforms are designed to push you toward constant activity. Prompts, signals, charts, all nudging your emotions to trade, not to wait. But what if instead you just invest? Buy from companies, diversify, pay minimal fees, and hope long. It's not flashy, but it's reliable. When you invest in a company that makes real products, has a moat, grows and generates profit, you become a part of that growth. When you put money into equity, you aren't subject to option volatility. You aren't fighting algorithm. You don't risk a sudden blow-up from a wrong bet. You capture lasting value. I'm not saying options are pure evil, but I'm saying you don't have to use them to be a successful investor. And it's often better not to use them. If you want real financial freedom, don't chase fast wins. Let time work for you. Let company growth, innovation, economic progress, deliver returns. Be an investor, not a gambler. Simplicity wins.